Hey guys, hope everybody's doing well. It's Saturday. I got not one, not two, I got four ETFs we're kind of looking at today. Kind of cheating because there's really two, but there's another two that kind of do the exact same thing. So four in one, right? So if you're new here, like, share, subscribe, do all that good stuff that I say in every single video. Affiliate links, like, share, subscribes, comments, all that stuff, right? Appreciate all you guys' support. We're growing. We're almost gonna hit 5,000 subscribers. I'd like to see that happen this weekend. I don't know if that's possible, but we'll see. And if you guys liked and shared on your social medias and all that, I bet we can hit it. So what are we looking at today? We are looking at the Global X, what do they call it? Risk averse? I forget what they call it. They're like collar strategies, basically. These aren't income funds. I know when we think of Global X, that's kind of like, our first thought, right? Global X and QYLD, XYLD, RYLD, all these big income producing funds. That's not what these are. These are essentially core stock funds. Core stock funds in either the Nasdaq 100 or the S&P 500. And what they do is they apply some options to either gain some premium, limit the downside, limit the upside, or limit the downside a little bit and have no topside cap. We'll go over all that. Just stay tuned. So let's get into it. Hope you guys enjoyed your week, and let's go. So first up, we're looking at QCLR. I know I came up last week. If you missed last week's video, I came up with Quermy and XZermy. I don't know. I just think every ETF, their letters should say something, right? So we have QCLR or QClear, or I don't know how you want to say that, but it's QCLR. It's the Nasdaq 100 Collar 95 110 ETF. Now, I'm not going to go deep into the prospectuses and all that, because these are really, all four of these are extremely simple ETFs with very simple rules-based option strategies. Okay, so we'll just talk about it a little bit. So what is QCLR? It is a ETF that employs a collar strategy for investors seeking range-bound equity returns. QCLR seeks to achieve this outcome by owning the stocks in the Nasdaq 100 index while buying 5% out of the money put options on the Nasdaq index and selling 10% out of the money call options on the Nasdaq index. So why would you want to do this? Well, the growth potential. QCLR enables investors to participate in the growth of the Nasdaq 100 up to approximately 10% from the selling of the call to the options expiration in 3 months. So they sell their options every 3 months, so 90 days. So in 90 days, you have the opportunity to participate in 10% of the market upside. Okay. And then you manage the risk. Now, how do they do that? By employing a collar strategy. Now, what a collar strategy is just buying protection on the downside after selling the call. Okay. So by employing a collar strategy, QCLR aims to lessen drawdowns to approximately 5% from the purchase of the put to the options expiration in 3 months. So they just buy a put that's 5% down. So what would that do is limit the downside to approximately 5%. It can't stick at 5%, but it's approximately 5%. So if the market in those 3 months were to fall, say 30%, your limit on the downside is 5%. So this is really if you are bearish, right? If you really don't think, if you think that the next crash is coming or something of that nature, and you don't want to participate in that downside, this is where something that you can buy, and it would manage that for you, right? It would allow, it's kind of like NUSI, except NUSI puts a cap to the top side, sort of. NUSI's actively managed, so they can actually pull that call option if they see the index that's going to run past it, and they can participate in that upside. So it's the strategy's similar, okay? But the difference is, of course, like I said, NUSI's actively managed, and they can move those strikes and those percentages as the managers see fit. With Global X, everything's all fixed. It's all rules based. This is what we're going to do every time, okay? So why would you buy QColor? Well, you'd buy it to save you the time and the hassle to run your own collar strategy, okay? So that's QColor. They also have XColor or XClear. That's the S&P 500 version of this, and it runs exactly the same way. It's just on the SPX, which is essentially the S&P 500 index and not the Nasdaq. So, but otherwise, everything is exactly the same. Now, would you want to own both? I mean, you could. I mean, there's some Nasdaq stocks that are in the S&P 500, vice versa. But if you want, growth, you'd probably want a little bit more in the QColor than the XColor. Nasdaq typically has outperformed the S&P 500, but you still have a 10% cap on either one. So now they have another couple that are called tail risk ETFs. Okay. Now what these do, this is cutter. It's QTR. It's the Nasdaq 100 tail risk ETF. Now what this does is it employs a protective put strategy, kind of like NUSI, for investors seeking to buffer against market sell-offs. I'm referencing NUSI just because I know there's a lot of people that know that, because I've covered NUSI a lot, and that's most familiar. Okay, so they buy 10% out of the money put options on the Nasdaq 100. So that's all they do. So this is kind of like QQQ and buying a 10% protective put down on the bottom. And I think they do it every 3 months. Let's see. And that's all they do. So the top side is uncapped. There's no call income. There's none of that. All you're doing is limiting your downside to 10%. And they do that every 90 days. So every 90 days, they buy that same 10% put, right? So as long as the index stays above that, then it's just essentially buying an insurance policy. Okay, you hope you never use it, but if the market were to drop further than 10%, then you're protected past 10% approximately. Okay, so why would you buy this one? Same thing. Saves you the time and the effort to actually just buy a put option. And they charge on all of these, and it seems like all Global X products, they charge 0.6% on the expense ratio. That goes for all four of these. Okay. And now there's XTR is the S&P 500 tail risk, which does the exact same thing as cutter or quarter or whatever you want to call it. 10% out of the money put options. That's all they do. And they charge you 0.6% for that privilege of them buying one put option every 3 months. I gotta tell you, it doesn't sound like a great deal to me. At least on the collars, you get 2 purchases every 3 months. But on the quarter and the extra, you only get one option bought every 3 months, and you pay 0.6% for that option. Okay. How do I want to show you this? So this kind of looks like this. Okay. For the Q color and X color, the 5% out of the money. So let's go 90 days and let's use the Nasdaq. So what they would do is you see the current purchase price of the Nasdaq is 15,500. They buy a 5% move down, which is approximately $750. So they'd buy like this 14,700 for $350, 348 bucks, something like that. And then they sell the 10% up, which is around $17,000, and they'd sell that for about $54. So whatever that was, $348 minus 53 bucks. So it's costing about $290 for that protection and to limit your top side. It sounds like a bad deal. It sounds like a bad deal to me, because you're really not going to get any income out of this. Okay. Yes, they're selling the call at 53. They're collecting that income, but they're buying this put down 5%, and it's just going to eat up all that. So don't expect much income in these ETFs. Now the tail risk, what they're going to do is they're going to buy 10% below this current strike price to protect you from a 10% drop. So 15,500, they're going to go 1,500 below that. What would that be? 14,000. So they would buy the 14,000 every 3 months. So they would spend about 230 bucks roughly for that downside protection. Okay. So again, don't expect income. These are growth ETFs with some downside protection. So let's recap here. I don't usually do this. I'm using Notepad. Recap here. Q color and X color. You get 5% downside protection over a period of 90 days, and then they reset that and do it again. Your top side is capped. So you can only participate in 10% of the move up, okay, because you sold a call. So if that 10% comes in a month, I don't know what they do then. They just kind of, because they say they're going to let it expire. So I doubt you'd get 10% in the top side in a month, but that is what it is. But you're 5% protected on the downside, 10% capped on the top side. That's QCLR and XCLR. I just thought of something like that. Reminds me of a cleaner. What is that? CLR? CLR. Oh, these names crack me up. And then Cutter and Exeter, you get the 10% downside protection. So your put is actually cheaper. It won't cost the fund as much money. You are unlimited topside participation. So it's just like owning QQQ with buying a put that's 10% below cost, below the current share price. That's exactly what this is. And again, the income, don't expect anything because they're spending money for the bottom side protection. So your income's going to be pretty much nil on both of these. I think I covered it all. That's Q color, X color, Cutter, and Exeter. Those are the risk managed ETFs or tail risk ETFs from Global X. As you can probably tell, I'm not a fan of them at all. I'm more of a fan. If I were to buy one, it'd probably be Q color or X color, because for 0.6%, I mean, you can buy these indexes I think QQQM is like 0.22. The S&P 500, what is that? SPY is 0.10 or less. Even VU is way even cheaper than that, but I'm thinking options here. So, you're getting charged a ton of money to have them. All they're doing literally is buying one or two options every 3 months, and that's it. That's all they're doing. And to me, personally, in my opinion, that's a ripoff for what they are charging. Okay? Strong opinion, but that's just the way it is. Hope you guys enjoyed. Enjoy your weekend. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.